Hey there, fabulous listeners. Welcome back to the Do Different Better show, where we talk about wealth, wisdom, and money moves, making finance simple for everyday people. I'm your host, Elaine Rasmussen, founder and CEO of Social Impact Now, Connective Institute, and managing director of the Integrated Capital Fund. Thank you for joining me today. And as usual, in our last few episodes, we've had a special guest join us. This is Mr. Skittles. We'll see how long he decides to stay on the show today, but he's going to be my ride or die partner as we talk about the wonderful and exciting world of investment clubs. Whether you're a seasoned investor or just starting out, joining an investment club can be a game changer. I'll share with you today what are investment clubs, how long they've been around, and how to start your own investment club, but also ways to grow your investment club, as well as resources to help you along the way. In this first segment, we're going to cover what investment clubs are, their rich history, how they work, and some of the amazing benefits of being part of one. So let's get started. So, what exactly is an investment club? An investment club is a group of people who pool their money together to invest as a team. Think of it as a financial book club, but instead of discussing the latest bestseller, you're really diving into stocks and bonds and other types of investment opportunities. If you listen to the previous episodes, we talked about different asset classes, and in a future episode, we're going to be going a deep dive into the stock market and what it is. So stay tuned for that. But the main goal is in the investment club is to learn about investing in a very safe and comfortable environment, share ideas, and grow wealth together. Here's how it works. Members meet regularly, usually once a month, but your group will decide that, and we'll talk more about that. But you'll take that opportunity to review the portfolio, discuss potential investments, as well as make decisions as a group. It's like having your own team of wealth advisors who also happen to be maybe friends or family. The beauty of an investment club is that everyone gets a chance to give a say in the decisions that are made, but you also have an opportunity to learn from each other's insights and experiences. But investment clubs are not a new concept. They have actually a rich history within a variety of ethnic communities, serving as not only a means of financial growth, but a tool for communal support, education, and empowerment. Here's a look at historical context of investment clubs in the Black, African American, Jewish, and Muslim communities. So, in the Black community, investment clubs were used for economic empowerment. So, we think about there's been a long rooted, there's often been rooted in desire for economic empowerment and independence. Given the historical context of systemic and economic exclusion, these investment clubs became really crucial for building financial literacy and wealth within the community. There are also what are called tandas or susus. These are investment clubs that are rooted in African traditions, and they tend to be a little bit more informal savings or credit groups. These communal financial practices allow members to pool their resources and provide loans to each other to promote economic stability and growth. During the civil rights movement, economic empowerment was seen as an integral part of achieving social justice. Organizations like the Black Economic Union in the 1960s really aimed to foster economic development within Black communities, often using collective investment initiatives. Here are a couple of notable ones that you want to know about. The First Ladies of Wall Street. This investment club was founded in the 1980s and was largely composed of African American women who aimed to increase their financial literacy and investment acumen. Their success inspired many similar investment clubs across the country. Then there are the Beardtown Ladies. Although they weren't exclusively African American, this group of women were formed in Beardstown, Illinois, and gained national attention in the 1990s for their successful investment strategies, showcasing the potential of community investment based clubs. Then there, you also see this concept of investment clubs in the Jewish community. Sometimes you'll hear about them called mutual aid or cooperative societies. Jewish communities have long had a tradition of forming mutual aid and cooperative societies, which include investment clubs. These organizations were often created to support community members in times of need and foster economic self-sufficiency. Jewish cultures, the Jewish culture really places an emphasis on education. And this is another opportunity that has shown up in their culture. Investment clubs are often serve as education platforms where members can learn about investing and financial management in general. And then finally, really around the immigrant experience. So many Jewish investment clubs were established by immigrants who pooled their resources to help each other achieve financial sustainability and upward mobility, particularly in new countries. Some notable examples are many Jewish federations and community centers within the United States have facilitated investment clubs as part of their broader mission to promote financial literacy. There's also a historical context within the Muslim community. There are Islamic finance principles, and these investment clubs in Muslim communities often adhere to Islamic finance principles, which prohibit interest rates, or riba, and emphasize ethical investing. These principles share the structure and goals of Muslim investment clubs. There's also collective investment. So, Muslim investment clubs frequently focus on halal investment opportunities, which means ensuring that their financial activities comply with Islamic law. And these are often investments that are made in real estate, business, and other ventures that meet their ethical religious standards. So, some ones that have been really famous and based in Canada is a cooperative that follows Islamic finance principles to provide interest free housing loans to its members. It's an example of how Muslim communities adapt investment club models to meet their needs. There's also Sharia compliant investment clubs. So many Muslim communities have formed investment clubs that focus on Sharia compliant investments, providing members with opportunities to invest in ethical and profitable ventures. What all investment clubs have in common is that they play a role in the financial empowerment of ethnic communities. They provide a platform of education, mutual support, but also help members navigate and overcome economic challenges. Whether influenced by cultural traditions, religious principles, or historical experiences, these clubs can be really valuable tools for building wealth and fostering economic resilience within your community. Now, let's talk about how they actually work. How do investment clubs actually work? Well, first, there's membership. Typically, an investment club can consist of 10 to 20 members. This size is manageable and ensures that everyone can participate. Each member agrees to contribute a set amount of money regularly, which goes into the investment pool. You can form a smaller group, but as if you want to have a critical mass, then and depending on the amount that people are investing, you may want to expand your numbers so that you actually have a good size of capital to invest. Then there are meetings. So once again, members meet once a month, typically to discuss the club's portfolio, potential investment opportunities. And these meetings are really crucial for making informed decisions and ensuring that everyone is on the same page. Then finally, there's decision making. So decisions are made usually by voting. This democratic process ensures that all members have a say in the investments. It's a great way to learn about different perspectives and make really balanced decisions. Here's a tip: make your meetings fun. Rotate the hosting duties among the members and make it a social event. You can even have themed meetings or create investment challenges to keep things really interesting. So, what are some of the benefits? There are a ton of benefits in joining an investment club. One is education. One of the biggest advantages of an investment opportunity is learning about investing by doing it together in community. You'll gain insights from more experienced investors and learn new strategies and techniques, maybe for your own personal investment purposes. But it's like having hands on training around investing every single month. So it's a muscle that you're building. Then there's diversification. By pooling money with other members allows the club to diversify its investments more than actually an individual might do. And we talked about diversification and the value of diversification in a previous episode. This diversification helps spread the risk and can lead to more stable returns. Then there's networking. Investment clubs are fantastic networking opportunities. You'll get to connect with people who share your interest in investing, and you can leverage each other's knowledges, resources, and connections. So it's a win win. So here are some practical next steps. If you think that you're ready to get started, I'm going to offer you some concrete things that you can do to really start to think about starting this journey. So, the first thing is do some research. Start by looking up local or online investment clubs. There are many resources that are available that can help you find investment clubs that fit your interests and needs. You can literally go into Google and say investment clubs near me. You can go onto the meetup platforms, or you can go to Eventbrite and just type in investment clubs. Um, Asking around, talk to your friends and family and colleagues to see if they're interested in starting an investment club with you. You might be surprised at how many people are eager to learn about investing and grow their wealth together. A next thing you might want to do is attend a meeting. If possible, attend a meeting with an existing investment club. Whether you're looking to join that one or not, it just gives you some perspective as what you might be walking into. It'll give you a sense of how it works and whether or not it's a good fit for you. Many clubs are open to guests, so don't be shy about reaching out. Now, here's a call to action. Take the first step today. Start your journey by researching some local investment clubs, talking to your friends, or just gather a meeting of some people who might be interested in thinking about starting a club. Not with any obligations, but just really kind of like, let's talk about it and see where everybody's interest lies. Remember, the journey to financial empowerment begins with the first step. That's it for this segment on understanding investment clubs. In this segment, we talked about the history and the nuts and bolts of what are investment clubs. If you're excited about pooling your resources, learning and investing and growing wealth with your friends and family, stay tuned in the next segment when I dive into actually how to start an investment club. I'm your host, Elaine Rasmussen. Thanks for listening to Do Different Better. I will see you after the break. Hi there, beautiful people. Welcome back to Do Different Better. I'm your host, Elaine Rasmussen. And in this segment, we're diving into the nuts and bolts of starting your own investment club. If you're excited about pooling your resources and learning about investing and growing wealth with friends or family, this is the guide for you. So let's get into it. First things first, let's talk about the initial steps that you need to take when you're going to start an investment club. So, the first obvious thing is form a group. Gather a group of people who are interested in learning about investing and who are committed to working together. In a previous episode, you heard me talk about how I started a group that was really interested in investing in cryptocurrency. And through the number of conversations, not everybody wanted to stick around, but it was great to just be able to be in a group of people who were really interested in the topic. And based on the conversations, that led to us forming our own cryptocurrency investing group. The recommended size is about 10 to 20. This is really manageable and ensures that everyone can really actively participate and there's not too much noise. If you know that you will be making, if you know you will be making an investment, you may want to start a group with similar people that maybe starts with a group of 5 or more, and then let the group grow. Because you may not know 10 people right away who might be interested in. But starting with a smaller group allows you to be able to kind of really think through what do you want this group to look like and what will be its purpose and function. So here's another tip. Look for members who bring diverse perspectives and skills to the table. A mix of backgrounds and skills can really enrich the conversations and investment discussions. You don't necessarily need to have somebody who has an investment perspective or has done a lot of investing. The whole idea is that you're learning together. So the next thing that you want to do is decide on the investment club's goals. So are you focusing on long-term growth? Are you talking about generating immediate income or a mix of both? Are you interested in investing in stocks and bonds or real estate? Or I think it's a really good idea to think about how much of a return are you looking to make? What is the time period that you would like to make that return on investment in? These are really good questions to start with to see where is everybody at and what are their expectations or what are their assumptions that they're making coming into the group. Having clear goals will guide the investment strategy and help keep the group aligned and make sure that everyone is on the same page. Some folks may leave the group, and that's okay, because if you're the group, different people in the group might be looking for longer or shorter term investments, depending on where the conversation lands in your meetings. Or maybe they're interested in doing real estate, but the group really wants to invest in small businesses. So it's just the more clear you can be, because you can't invest in everything, right? Being clear, maybe another subset of the group goes off and starts their own, and you can be in more than one investment club. So if you have started a meeting and you're meeting with folks and you decide that you want to invest in small businesses, there might be a subgroup that says, hey, we want to start another group that is really interested in investing in real estate or the stock market. So the next thing is you want to create some rules. Establish clear rules and guidelines on how the club will operate. And there's some templates out there online, as well as if you start to visit some other investment clubs, many of them will share their rules and their incorporation operating agreements. So you can kind of see different ways that different people are managing their investment clubs. But in the rules, it will include how often you meet, how decisions will be made, and the roles and responsibilities of each member. Here's a tip. Consider creating a voting system for investment decisions. This ensures that everyone has a say and helps prevent any one person from dominating the decision-making process. These steps are crucial for setting your investment club up for success. By forming a committed group, setting clear goals, and establishing rules, you can create a solid framework for the club. Now, let's talk about actually setting up the club. So now that you have your group and your goals in place, it's time now to get into the logistics of setting up the actual investment club. So the first thing is understanding about the legal structure. So you should absolutely choose a legal structure for your club, such as a partnership or a limited liability. Maybe it's a benefit corporation, and we'll talk about those in another episode. But this provides legal protection and helps manage the financial responsibilities of the club. Here's a tip. Consult with a legal professional to determine the best structure for your club and how to handle the registration process. Once again, you can talk to other investment clubs and see how they've managed that. They might have this process written down. So that's going to be super, super helpful and just will prevent a lot of heavy lifting on your part. The second thing is to open up a brokerage account. So opening a brokerage account or a bank account, and it's really going to depend on what kind of investments you want to make. If you're going to be investing in real estate, you probably want a bank account. If you're going to be investing in stocks and bonds, then you definitely want a brokerage account. But the bank account or the brokerage account needs to be in the club's name, and that will be used to manage your investments. If there's any checks that need to be written, or if you're going to be doing a real estate investment, but it just really makes sure that you have this mechanism that belongs to the club, not to one in particular individual. This account will be used to pool member contributions and execute trades if you're participating in choosing to invest in real estate. Some of the popular ones are Fidelity, Charles Schwab, E-Trade. They offer accounts specifically for investment clubs. Another thing that you want to do is develop a charter. So writing a charter that outlines the club's rules, goals, and procedures. Once again, many investment clubs are happy to share their templates or what they've created. And so just ask, and they'll tell you yes or they'll tell you no. And if somebody tells you no, move on to the next one. Or maybe they'll share a redacted or blacked out some of the more critical information or personal information. But many investment clubs are willing to share some of these documents. But the charter serves as the operating manual for the club and ensures that everyone understands how everything works, right? And it's just very transparent, not only for the current members, but any new members that you bring on. This is something that you will share with new members so that they can understand what are the roles and commitments of being part of this club. Here's a tip. Include details even on how new members can join, how profit and losses will be distributed, and the process for making investment decisions. Those will be really, really critical, especially if there's any issues that come up. And you should always presume that issues will come up. I find it's much more helpful to talk about how you'll handle disagreements when you're not in a disagreement. right? So thinking about how will we handle disagreement? How will we handle tension? How will we manage tiebreakers, or if there's an even split? Particularly, will there be required to have quorum when you're having a meeting? Meaning that a minimum number of people need to be in the meeting, in attendance of the meeting, before a vote can be taken on any particular decision. Now, here are some practical and tactical steps, right? The first thing when you're creating a creating a member agreement, when you draft an agreement, all the members need to sign it. This will once again outline their responsibilities and their commitments. So no one can say, I didn't know that our contribution was $100 every week or $100 every month, right? No, this is clearly outlined in the membership agreement, which is different than the charter. The charter is for the organization. The member agreement is what each individual person is saying that they are agreeing to as they are participating in this investment club. This agreement should cover their membership contributions, their attendance requirements, and the process for leaving the club. What do they get to take with them? What needs to stay in the club, and what's the duration? There are some investment clubs that say you cannot withdraw within 6 months of you becoming a new member. Some will say you have to attend 80% of our meetings for the year, or 20. You cannot miss one of the clubs that I was a part of. We had a clause that said if you miss 2 meetings in a row, you became an agenda item, right? Meaning, like, we need to have a conversation of, like, should you still be in this club? Do you want to be in this club? And do we need to plan for an exit for you in this club? So once again, having those conversations when everybody still likes each other is much easier than trying to manage it and navigate it while it's sitting in the tension. But the tip here is to be really clear about the financial commitment, the time commitment, because those are really, really important. Members should understand how much they need to contribute, how often, and how they are tied to the organization and what can be an exit strategy. Also, I think it's really important to talk about what happens if somebody passes away. We know that people pass away and it's not always planned, right? You should talk about what will happen if the person is incapacitated in some way. They're unable to attend the meetings. They are sick or perhaps hospitalized. What happens then? Do you offer proxies? Is there somebody else who can vote in your place? What happens, right? So you can't think of all the scenarios. And as different scenarios come up, you can continue to add those to your charter agreement as well as your membership agreements. The next thing is to schedule regular meetings. So plan and schedule your first few meetings. Consistent and regular meetings are crucial for keeping the club engaged and on track. Here's an example: setting a recurring meeting date and that happens the same time, whether it's the same, third Wednesday of every month, or it is every Saturday morning at 8 o'clock. We meet and we walk and talk, or whatever that looks like. But also set an agenda for each meeting to ensure that there's no swimming around the toilet bowl, right? The conversations are going down the rabbit hole, and making sure that you stay on track with the conversations. And I'm a big fan of starting on time and ending on time. Everybody knows when the meeting is, and if you make a habit of waiting for everybody, then people will continuously be late. Maybe not on purpose or not intentional, but if you become the person, or if you become the club that no matter who's here, we're starting on time, people will start to respect that and hopefully change their behavior to adjust to be on time at the meetings. The next thing is to really start with simulations. You don't have to start off with making an investment right away, right? Use investment simulation tools, or just start practicing saying, hey, we're going to watch this stock for the next 5 weeks, right? And we're going to act like we were going to put in $5,000 and let's see what happens, right? It's a great way to practice making investment decisions before really committing with real money. This helps members get really comfortable with the process and developing their investing skills, but it also allows you to be able to test how things might crash, right? What kind of tensions might arise if things don't go well? Well, there's no money involved, so it gives you an opportunity to work through and figure out what adjustments do you want to make to your charter as well as your member agreement based on the experience you had with the simulation. There's some great websites like Investopedia and MarketWatch that offer free investment simulators that mimic real market conditions. Taking these practical steps will ensure that your investment club runs smoothly from the start. A member agreement clarifies expectations, it sets what the regular meetings are, it keeps everyone engaged, and it's really helpful to start with these simulations to really build your confidence and skills. So, here is my call to action for all of you. Start a group. Reach out to your friends and your colleagues who might be interested in doing an investment club, right? No one's committing on the first day. You can just say that this is just a meeting to see who's even interested. What are they thinking about? What are their fears? What are the challenges that they might face in if they were to participate? What could it look like? What kinds of things are people interested in investing in? What are things that people are interested in learning through this process, right? But just by starting an informal meeting, could be at your house, can be at the park, can be at your gym club, can be at your office in the lunchroom. You can have a meeting anywhere at a coffee shop. But you can really start to think about and talk about what is the vision, your vision, their vision, and what's the level of interest. Are people saying, hey, I'd like to join, but I'd like to join maybe 6 months from now? I'm about to purchase a home and I really am not sure where my finances are going to be. Or I had a friend yesterday or the other day we were talking and they said that they were really interested. They weren't really sure where they are because they are not sure what their financial obligation was going to be with their kids' college tuition because they hadn't received the financial packet yet. So once again, you're not asking people to commit on the first day, but it's really about let's begin the conversation to figure out what's of interest, who wants to do what might they be thinking of, and starting a running roster of questions that you all may want to start answering as you all meet. And maybe you all decide we're not going to make an investment for a year. This first year is really going to be a learning journey. That's okay too. The idea is that you all are just coming together to learn and share from each other. And if investment happens, great, but you don't have to make any investments. So the next thing I want you to do is set your goals. As a group, decide on your investment goals and what you hope to achieve together. Write these goals down and revisit them regularly to stay focused. I find it's a really good idea to, once you've written them down at the beginning of every meeting, somebody reads them aloud, right? Once again, it stays at the top of mind of everybody of what your focus is on. And it can raise questions as people process the information every single time you read your goals aloud. The third thing is get organized. I highly, highly, highly recommend having a Google Drive or a OneDrive where all of this information sits that's accessible to everybody. So when you create your rules, you create your structure, you open your bank account, you develop your charter, all of that documentation should live someplace because as members shift and change, you want to be able to have a central location for all of that information. And you will probably need to decide who is the signatory on some of these accounts. And maybe there needs to be two people just to prevent any weirdness or any other things that might go on. So that's it for this segment on starting your own investment club. By following these steps, you will be on your way to creating an accessible and engaging investment club that helps you and your members grow wealth together. Join us after the break where I'll be discussing managing and growing your investment club. I'm your host, Elaine Rasmussen, and you are listening to Do Different Better. See you after the break. Hello, fabulous financiers. Welcome back to the Do Different Better show. I'm your host, Elaine Rasmussen. And in this segment, we're going to focus on how to manage and grow your investment club. We'll cover everything from researching investments to continuous learning and some practical steps to keep your club running smoothly. So let's dive in. Once your club is up and running, managing your investments effectively is crucial. Here are some key steps to ensure your club's success. So, first thing is research and analysis. It's really good idea to assign members to research different kinds of stocks and bonds and other investments. Actually, this was my foray into finance. I think I shared in the first episode when I was 18, I was a stock analyst for Shearson Lehman Brothers. And that was my whole job was to just, I had a portfolio of 40 stocks and that's all I did all day, every day. It was just research. I was looking at um, their investment relations documents. I was looking at their profit and loss statements. I was reading the newspaper. I was reading the Wall Street Journal. Back then, we didn't have Google. So I had to do hard research, reading newspapers. There was no online way to access newspapers. So I'd have to go to the library to find out different pieces of information. Sometimes I'd have to call the company, get their investment reports or their investor reports and have them sent to me. It was a much different job then. We didn't have Bloomberg where you can just pull up something and learn everything that we need to know about a company. But I loved it. But it's really great to kind of start to understand how many CEOs has the organization had? How long has the organization been operating? When have they gotten themselves into trouble? How did they get themselves out of trouble? But each member can present the findings at the meeting, which helps everyone learn and have everybody make informed decisions, but also can raise more questions, right? So a really good tip is to rotate the research assignment. So one, everybody gets a chance to explore different types of investments. And this keeps the process fair and engaging. People don't feel like I'm only doing stocks or I'm only doing this kind of thing. For example, one member might research a tech stock, another might look into municipal bonds, another could investigate real estate investment trusts like REITs. And we talked a little bit about REITs in a previous episode. Presenting these findings at meetings ensures that everyone is informed and can contribute to the decision-making process. Number two, the next thing you want to do is you want to track your performance. So you want to keep detailed records of the club's investments. Using spreadsheets or an investment tracking software to monitor performance and dividends and other key metrics is super, super helpful. You want to also regularly review the performance of the investments. This helps you identify trends, successes, and areas for improvement. By tracking your investments, you can see how well the portfolio is doing and make necessary adjustments. This ongoing review process is essential for maintaining a healthy portfolio. Then you want to make sure that you diversify. Ensure that the club's portfolio is diversified to spread the risk. Remember, we talked about risk is your appetite for losing money. Putting all of your eggs in one basket is not the thing to do. So invest in a mix of stocks, bonds, real estate, or other assets, unless the club decides our whole focus is we're going to invest in real estate, where our whole focus is we're going to invest in small businesses. Then you want to be looking at the diversification of the businesses that you invest in. So you might want to say, hey, we want a construction company, we want a consumer packaged goods company, and we want a tech company, right? Those all have different dynamics on how they cash flow, and that can inform your return, which then informs your ability to withstand any losses by any one or two of those companies, right? And we can talk more about that in another episode. But diversification helps protect the portfolio from volatility in the market and reduce your risk of significant losses. A well-diverse portfolio might include, stocks from like the big companies like your Apple, your Facebook, but also some government bonds and international investments, and maybe even some alternative assets like commodities. And once again, we did a whole episode on different asset classes, so you'll definitely want to check that out. The goal here is to balance risk and reward or return on investment. Now, then you want to be able to really offset or add education and continuous learning. So to keep your investment club thriving, continuous education is key. One thing to do is keep listening to Do Different Better. But here are some ways that you can ensure that everyone in the club is constantly learning and improving their investing knowledge. Invite guest speakers. Have guest speakers come to your meeting. They can provide valuable insights and answer questions and share their experiences. You can do this by reaching out to financial advisors, economists, or successful investors who can offer you different perspectives and expertise. Financial advisors are always looking for new business, so they are far likely to want to spend a Saturday or a an evening talking about your questions around different investment opportunities. But having guest speakers can be incredibly motivating and educational. It's a great way to learn from the pros and apply their wisdom to your own investment strategies. Then there are workshops and courses. So, attending workshops and taking online classes will really help improve your investing knowledge. You can decide as your agenda items that you're going to be watching a video that somebody has curated from the group. They may have screened it to see, like, oh, yeah, this could be something that would be really great for our group. And then you, on your agenda, you say, hey, this is a 20-minute video. We're going to take 20 minutes of our meeting to watch this video and have a discussion. That's quite all right. You get to make the rules. But many financial institutions and online platforms offer free or low-cost courses on investing topics. I think Coursera has some. I think LinkedIn Learning has some. I know there's some on YouTube. You just want to be careful on YouTube. The information you're getting and whether that information is by somebody who is a certified or registered advisor, right? So there's a lot of people on the internet talking about wealth at, different kinds of investment opportunities. And I would just be mindful of filtering that information through the lens of somebody who is has a legal or what's called fiduciary responsibility, because they are certified, very much like a lawyer goes to the bar and gets certified. Financial advisors also have various certifications that give them certain parameters on like how to share information, what information to share, and what advice to give, and how to give that advice. So just be mindful of that. But here's a tip: scheduling these learning sessions, maybe it's once every 4 meetings, maybe it's once every 6 meetings, can be another opportunity to keep people engaged and on this continuous learning journey. But workshops and courses really do a great job of providing deeper insight and diving deep into some specific areas, such as how do you technically analyze, how do you think about retirement planning, but also understanding different market cycles. So when you hear things like it's a bear market, those are things that they will go in and explain what do you mean by a bear market? What does that actually mean? Then another thing that you can do is to start a book club within the investment club. So reading and discussing investment related books as a group. This not only enhances your knowledge, but also fosters a sense of community. Here's a tip: choose a mix of classic investment books and some newer releases to keep the discussions fresh and relevant. There's some great recommendations that I can give you. I'm a big fan of The Color of Money, by Amersha, I'm going to say this horribly, Baradaran, and Janine Firpo's Activate Your Money. There's also The Intelligent Investor by Benjamin Graham. There's Rich Dad, Poor Dad by Robert Kiyosaki. I think that it's a fairly easy read. I think everybody should read this book. There's also the Little Book of Common Sense, Investing by John C. Bogle. Reading and discussing these books can spark really valuable conversations and ideas on how you might want to form your club, what you might prioritize in investing in your club, and what also where you might want to start and where are you going to. So once again, here are some practical and tactical steps. Let's talk about regular reviews within the club. So in the club, as I mentioned before, you want to schedule at least quarterly reviews, at minimum quarterly reviews. If you want to look at it monthly and look at your portfolio, the only thing I caution about having monthly portfolio reviews is it might frighten you, right? Especially if you're investing in the stock market. The stock market has lots of volatility and goes up and down based on a number of different things. And so it might freak you out if you are looking at it quarterly because you're seeing big, high jumps and then low lows. And the thing to remember is when you're thinking about the stock market, think about long term, right? We're really talking long term. And if you look at since the inception of the stock market, the trend has always been up. Yes, we've had some deep lows and we've had some high highs, but if you look at the entirety and the longevity of the stock market, it is always, always, always trended up. It's just a matter of can you withstand the time period, right? That's the big piece of it. But I definitely recommend scheduling quarter reviews of the club's portfolio to assess the performance, make adjustments, and then ensure that your investment's on track with the goals that you have set up for the club. And if they're not, that becomes a conversation. Is the goal to is the goal to stay like base is the goal a real goal, or does the goal need to shift and change because the market conditions have shifted and now you need to, as a group, realign what the goals are for the group, the investment club. So but you can also look at the different market changes to see how they will also impact the investments that you have made, right? But it's also a great time to celebrate your successes and learn from any challenges you face. I find it's really important to talk about and notate and document when you've been unsuccessful, or when you've come up against a challenge of something really hard. I think it's really good to document that in your notes. So as you bring on new members, it's great institutional memory of like, hey, this happened. These were the circumstances. This is what we did. This is why we decided to do what we did. And we're going to keep monitoring this on a regular level, on a regular time period. So that documentation allows you all to have that memory, not only for the members that are in the club, but for any future members to come along to understand how do you navigate conflict. It's a really great thing to do, just in general. But also then identifying member roles. So assigning roles such as treasurer, secretary, research coordinator to ensure smooth operation. These roles help distribute responsibilities and keep the club organized. Here's another tip. Rotate the roles periodically to give everyone a chance to develop new skills and contribute in different ways. I recommend maybe 6 months to a year. Everybody should commit to their role for 6 months to a year. In the beginning, a year might be a really long time, or maybe you want to start out with quarterly. Maybe you're like, hey, this is going to be your role for the quarter. But as the group matures, you might want to use longer periods of time so you don't have so much volatility. But once again, these are all things that you and your investment club get to decide. But here's an example. The treasurer can manage the club finances, the secretary can take the meeting notes, a research coordinator can organize the investment presentations. This structure of just allows things to keep really running fairly efficiently. And then what you want to do is you want to have an exit strategy, right? So we talked about like not just talking about when things are great, but also thinking about people might want to leave for a variety of reasons, right? And so what happens not only if somebody wants to leave, but what if the club wants to disband? By having this process also written down, this ensures that everybody knows what the process is and can plan accordingly. Include details on how members can sell their shares and how the club assets will be distributed in the case of it being disbanded, or if somebody sells their shares. Having a clear exit strategy provides peace of mind, includes and ensures that the club can handle transition smoothly. It's really important to have healthy relationships and a healthy and sustainable investment club. So by implementing these strategies and the steps that we've talked about today, you can manage and grow your investment club effectively. Make sure you assign roles, track your investments, and keep learning together. You definitely want to stay engaged by keeping your meetings regular, your discussions lively, and your goals in focus. Engagement is a key to any successful investment club, I can tell you. Share your success. Let us know how your investment club is doing. I would love to hear how things are going or where you're getting stuck. Share your experiences and tips with our community on social media. You can tag me at L Raspberry on Instagram. I would love to hear that, but also you can catch me on Facebook and YouTube. That's it for this final segment on managing and growing your investment club. By following these strategies, you can create a thriving, engaging, and successful investment club that helps you and your members build wealth together. Well, that wraps up another episode of Do Different Better. I'm your host, Elaine Rasmussen. Today, we talked about whether you're a seasoned investor or you're just starting out, joining an investment club can be a game changer. I shared what investment clubs are, how long they've been around, and how to start your own investment club. We also talked about ways to grow the investment club, as well as resources that can help you along the way. Join me in the next episode of Do Different Better with Elaine Rasmussen, where we'll talk about kids and money, teaching financial literacy to kids when you may not be really good at it. Starting the journey with your kids is a great way for you to learn together and get what you never got. I can't wait for next week's conversation. See you next week, and I'll show you how to do different better. Let me know what you think of the show. We love comments. So tell us how this show has helped you. If there's a money or finance question you have, or if there's somebody you want me to interview, hit me up on LinkedIn or Instagram. Don't forget to hit the subscribe button and follow us on all our socials. That's bye for now.